Hello, today is Friday the 13th of April 2012. Welcome to today's silver video. Yes, it's Friday the 13th, but I think it's kind of superstitious to be superstitious, so I don't put anything into that. Let's get started with today's video. From Reuters, the CME Group, the biggest operator of U.S. futures exchange, will cut margins for COMEX silver futures for the second time since February in an attempt to boost liquidity after a narrow price range tempered trading interest. Well, we had a really narrow price range over Wednesday, Tuesday, and Monday, and last Thursday even. And we've been in a little tight range for the last couple of weeks, 3 weeks or so as well. But it's interesting how they want to boost liquidity, meaning they don't want the free market to decide if we want to be volatile or unvolatile. I find that interesting. And as well as a situation where they say, well, it's just that narrow price range. And even though we had that extremely narrow price range from the end of 2009 into the end of this August of 2010. We also had a large, long, tight trading range from the entire 1990s into the first couple of years of the 21st century. Well, if we happen to be in a price range, let the free market keep it or move it from the price range. That's my opinion only, though. And if you want to take a look at any link that people talk about, you can just type a few words of the sentence in. You'll probably find it. I'm not going to put the link in, but if you type in something like attempt to boost liquidity after a narrow price range, then you might get it number one. Try to get unique words like lowered to 14,000 from 16,000 April 16, and you'll probably get it again. Anyway. Second paragraph states, and this is paragraph 1, 2, and 4 from the page that I got this on. The CME said in a statement, it will cut the initial margin for COMEX 500 silver futures by 12.5% to 18.9 per contract from 21.6, and the maintenance margin will be lowered to 14K from 16 per contract, effective after the close on business on April the 16th. Okay, so that's on Tuesday that this would come into play, not today and not Monday. So if you found out, oh, they're lowering the margin rates, which is the opposite of raising them, and when they raise them, the price goes down. So shouldn't the market have gone up today? Well, that doesn't mean anything for today, or at least they can't use it to play within the market. Now, margins to me is the reason why I'm getting into silver, and I don't play this type of game, nor do I support it either. But the margins is in a lending, debt-based kind of system. I don't agree with it. That's how I see it. And it's the problem making the fiat currency very volatile. With that being said, I'm not a big fan of the KISS, the KISS, keep it simple, stupid type of ideology, but maybe in this example I kind of would be, at least for trading any type of markets. You have 4 choices to me. You should only have 4 choices. None of these futures options, or definitely not any type of leverage. Just you want to play the physical, tangible part. No fractional reserve lending. If you want your delivery, you got your delivery, and so on and so forth. But you have 4 options. You can either put it in an offer to buy, put it in an offer to sell, accept someone's offer to sell, or accept someone's offer to buy. That's the bid-ask ratio. That, to me, would really reduce volatility. And volatility would occur when big situations that make it happen for it to do so. So if you think that what we have for now to make these markets better, it's increasing volatility, and they seem to state that they want it within this video. And boy, the volatility probably will extremely increase. Let's go on to today's daily chart. And well, yesterday's gains have been all wiped out. The support levels obviously did not hold today. And if we take a look at the pattern of the last 2 days, I'm going to zoom this in on triple. So this is zoom 1 and zoom 2. If we take a look at this chart here, what would the last 2 days look like on a candlestick chart? If I'm just doing the 2-day chart, you got these two, you got these two, these two, these two, these two, and of course these two, and so on. What would the candle look like? Well, we opened here, we went up here, and we're currently barely below, so you'd see just a little small line that would be red and a big upline. So that would be like a hammer or a reverse hammer, which is normally a bearish situation, and this would be no different. It is a bearish move. Now, there's sometimes I can look at a hammer like that would be bullish. An example of that would be if it occurred on this candle here, for example, because you were at that major significant level that was Fibonacci, and it was also support resistance with its second test. And that means it would have went up, say, to like 33.5, 33.60, and then it would have been back to an area where it would, I don't know if you're going to say likely to find support, but it's not a surprise when you do. Therefore, that's exactly what the move would be doing. It would be showing something like this, then boom, and that's often what happens. But this is no significant level of support, because support was really two places. It was here and it was here. Neither one of them really survived. So therefore, will that mean on Monday there's no margin changes on Monday? Will that mean lower prices? If I never even knew or didn't expect any of this to happen, I'd be saying it's, again, it looks like it's going to 30. I've been saying that for a while now. But it's because it's taken its sweet little time to either do this move to 30 or the trap, because it's going to be a failed move regardless. We had an inverted head and shoulders pattern that barely broke the neckline, and the failure to make this type of move, make this higher low, this higher high, and then to just do this, that should cause a fast move. So that could be the failure, and then maybe this is the lower high from here, and that's just going to go lower. That could be the case. But then the failure to have an inverted head and shoulders failed move to create a failed fast move would create a fast move in the opposite direction. So you have this inverted head and shoulders, you failed to do a fast move down here, will that bring a fast move higher? And really the entire pattern would be that of a failed move in my opinion. Really, and it's, yeah, I would say opinion, because when I have a significant level like this first Fibonacci level that's acted so well as support and resistance, for it to break down below here, but really not come close to 30, really 30 and a third, or anywhere down to 29 and 2/3, or anywhere below it for that matter, would be the expected area I would expect the fast move to at least go to. So if it doesn't even do that, or barely breaks down below this low, then I'm going to consider this to be a failed move, which can oftentimes bring fast moves in the opposite direction. And if Tuesday brings more people in because they can get more shares due to the different margins, again, that wouldn't be a surprise as well. But of course, I can't make any guarantees within that situation. Weekly term time frame, and you can, yeah, this is just such a small trading range in comparison to what we've had before. But this was the end of the 2010 long trading range as well. But the moves are just somewhat tiny. We're in this band, and if we zoom in again on triple value, we can take a look at just how well this band has held as support for the entire month, or the last month. But the more often you test levels of support, the more likely it is you take it out. So we've had a lot of tests in around 31, and we've had a lot of tests roughly around 32 to 33. So there's been, it's a tight range. It's got to break from one side or the other. Sometimes the first move is a failed move, but very difficult to point out. Let me just take out one of the zooms and just double in on it. Final note again, we've had these, we had a situation with this low, this high, this low, this high, matching low, higher high. Put in one higher low and another higher high, and that would really change the momentum of the market. I like to see two higher lows, of course, as well. But again, any lower or higher low anywhere in between here, bringing a move back up would really create a very bullish sort of pattern, to say the least. And thank you for tuning into today's video, and have yourself a great weekend. Bye-bye.